Good weekend all. Ira Epstein with your weekend market wrap-up. And this wrap-up is for Sunday, and we're at the 1st of May, 2029. Well, as you can see behind me, it was a big sea of red, with on Friday the stock markets just taking a hard tumble to the downside. Now, they're getting into some interesting areas on the daily charts, approaching some Bollinger Band bottoms. I'd be paying attention to that. You were down in the energies, minor amount. Nothing really changed over the weekend as we're taking a look at the energy demand one way or the other. I will say this, in Shanghai, I did read that 6 of 15 districts look as though they could be coming out right now of the shut-in. 5 of them for certain are going to turn on the transportation there. So that's a very good sign, and that probably gets the market thinking, maybe we're at the beginning of something. Whereas at the other hand of that, you know, there's two sides to everything. Beijing's not looking that good for this holiday period, and they do have a 3-4 day holiday the beginning of May. They have told restaurants, no one, all of Beijing, can eat inside a restaurant, takeout only. And as I reported, the schools have closed down there, public schools, so they won't be open until the government says they can reopen. They don't want the kids getting ill. When you're looking at foreign currency markets, a little bit of everything. So let's take a look at what we've got. On a monthly area chart of closes on the E-mini S&P 500, you can see how the market is underneath everything. Finished off pretty poorly, down 9% for the month. So for the month, when we look at it, wasn't April supposed to be an up month? Well, historically, in the past, out of 25 months of April, only 5 were losers. Now we have 6 out of 26. So you can see how the number changes. For the more research people, that month also lost. They had 15 years in a row where April was a gain between, I think it was the 7th and the 30th or so. That didn't work out this year either. So bad news. I will say this, none of the chart pictures, if you're a technician, turned bullish. So while the seasonals were there, you never had the markets turn to the upside. When we take a look now, let's take a look right here. That's your monthly. From there, here's the weekly area chart. Down pretty hard too, down 3.2% for the week. And on the weekly chart, you can see how you're back into these lows that you had before. You have a pattern where you've got lower highs, lower lows on the swing line. That's bearish. You'd have to get back over 45.09 if you were to go straight up to break that pattern. That's far away, so I would expect something different to develop there. If you plunge down again this week, the 100-week average is waiting for you at 40.27. And as I said, you've got some Bollinger Band news. Each time you have hit this Bollinger Band, within short order, you've given yourself a bounce from there. So that tells me, why not expect that again? This combination is pretty lethal for the bear. I think he'll be covering his shorts there, wanting to see bounces and maybe then resume the selling. In terms of momentum, down. So trend down, bias down, into the first support of the lower Bollinger Band. You hit it actually on Friday for the low for the week. Maybe you follow through, but I'm looking for the market to find a little support. That's all that I can say. Support is not a turn of trend. In the NASDAQ, coming down, look for your market to find some support at the lower Bollinger Band, momentum down. Pattern here is different. You have a lower low, higher high. I'd like to see the market work into a pattern that gives us something better. Do I think these markets can get a big bid going into the FOMC meeting? No. Could the FOMC meeting say something that gives the market a reason to rally? Well, anything's possible, but I think we're looking for something way more hawkish on Wednesday than we are anything, that's dovish. In the Russell, you're down to the lower Bollinger Band. I think the pro's covered. If you're a weekly aficionado of charts, when you get to these numbers, as you can see, that's been an area where the market likes to see a bounce from. Why not? Let's assume I'm wrong. Been there before. Between here and 1771, yeah, I'd look for a big area where the market gets a bounce from if that should occur. 30-year bonds, as I just said, we get Wednesday's FOMC meeting. Then at the end of the week, we have another round of jobs data coming out I don't know. I'd be looking at this market. It's still working its way to lower levels before it's all said and done, with the embedded reading the same thing in the 10-year notes. Then we get to the dollar index, which is now, let me count this with you, 1, 2, 3, 4, 5, 6 weeks in a row, straight weekly gains over the upper Bollinger Band. That's highly unusual. Generally, you peak out around 5 if you stretch even that far. So this is just a sign of immense strength. You see that what's going on. When I've seen this happen, it doesn't mean you get hard breaks. It typically means that on the first breaks, you're finding those that are caught short are still trying to buy to mitigate their losses. You don't see that in the eurocurrency, by the way, which makes up 40% of the dollar index. You got under the lower Bollinger Band. It has a history of maybe a week or two, and then it bounces away from there. So I do see that the market at any point there can get a little bit of a bounce in this market. Trend is still down. Canadian dollar, right to the lower band. Are you getting a theme here? If you don't understand enhanced Bollinger Bands, at the end of this, let me explain it to you. Look at how the yen is just running on this number. When you get a central bank that says we want a lower yen, and they keep saying that, you take it down to those levels. So this is not acting as a safe haven currency anymore. It's acting as a crashing currency. That's the way to look at it. You are so entrenched here, again, like the dollar that's been going up. Rallies here probably going to get sold rather hard on the first reasonable rally. That's going to be the key word. What is reasonable? Bitcoin coming down. You can see it's under the 18-week average of closes. Big supports 35,880 to 35,421. Unless you can get back over this 43,010 level, I don't see any reason for it not to make a run to that lower level. We then come down here to Brent versus WTI Crude. Look at the difference. We're now on the dailies, I moved July versus July, but look at how you've narrowed into $2.45. You can see here, and by the way, I did read over the weekend that Russia is still allowing gas into its pipelines. It is supplying Europe, but come May, if you don't pay them in rubles, what they've done in Bulgaria and Poland is going to happen to any other country. The EU is meeting on that. I don't think they're going to pay in rubles. Therefore, we may see a complete shutdown of all that natural gas. You've got higher lows, lower highs. You're into a neutral territory suddenly. Same thing in the WTI. Where you're strong is in gasoline. Until this week's low is taken out, I think you're going to get pullback buyers in here looking for the market to go right on up through the spring and summer. No surprise there to me at all. As I said, we're getting a tremendous amount of markets from the stock indices to the currencies, all hitting the lower Bollinger Band. That's the importance of looking at that and understanding it. I try to explain in my charting course. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.